The Singapore dollar was one of the best performing Asian currencies in 2022, appreciating by 3% versus the US dollar. In that same time frame, other Asian currencies were down between 3 and 4%. Analysts attribute this to the fast action of the Monetary Authority of Singapore that tightened policy 4 times last year in an effort to combat inflation. The resultant strong Singapore dollar became very attractive to investors.
But I think we are seeing signs of that trade starting to unwind. In January, we've seen that the Singaporean dollar has gained against the US dollar, but at a lesser pace than perhaps some of its peers. Also, I think, suggestions from the mass that they are finishing the rate hiking cycle could also keep the Singaporean dollar sort of more under pressure compared to its peers.
Despite this, analysts do not expect the MAS to tighten policy this year. But this does not mean that it wants the Sing dollar to depreciate.
In fact, its policy is for the Sing to have a gradual and modest appreciation. Keep in mind that inflation in Singapore is still likely to a little bit sticky. So for that reason, the MAS is still likely to keep Sing on a strengthening path. But it is just that because global growth is also decelerating, and the MAS would be mindful not to strengthen the Sing in an excessive manner.
The big mover in the currency markets this year will be the impending monetary easing by the US Federal Reserve. That should give a boost to all Asian currencies.
There should be, theoretically speaking, no losers. It is just who would win more and who would win less. So for the relative winners within the region, we would say the Japanese yen would be one of the biggest winners, simply because if you recall back in 2022, the Japanese yen was the biggest loser when the Fed was tightening. And that was because the Bank of Japan was actually keeping interest rate policy very accommodative. But I think if we can add, it is not just about the Fed easing monetary policy for 2023, because 2023 is also about China reopening. So on that factor as well, there are other big winners in Asia. For example, the Australian dollar is set to benefit strongly from the commodity linkage with China, and the Thai baht as well. With Chinese tourists returning back to Thailand, we are also looking at the Thai baht as a strong beneficiary.
So with the rise of other currencies in the region, should investors turn away from the Sing dollar?
I'm not a seller of the dollar against the Sing around these levels. Dollar Sing has been in this 131, 146 range since the currency war in 2015, and right now we are near the bottom. So the last 2 times, dollar bounced from 132, it rose to about 138 in 2018, 137 in 2021. I have about 136, as my target for this quarter. When you talk about safe haven, you generally expect some unexpected shock. When I formed the outlook, I was looking for relative value and soft landing once the Fed and other central banks are done with their hikes. So I think that the Sing will be favored due to a strong track record, especially for long-term investors. For example, central banks looking to diversify reserves into a strong and relatively stable and well-managed currency.
Investors should also be cautious because markets remain volatile and inflation remains a concern in many countries.
The big risk is that the Fed aren't going to play ball, and they're not going to be as dovish or as less hawkish as the market will be hoping for, because that will mean that the market will need to start reassessing the likelihood of those rate cuts at the end of the year. So I think that's going to be the big area to watch. Will the US inflation perhaps be a little bit stickier than we perhaps first thought. The other thing to be watching out for as well is going to be escalation of the Russian Ukrainian war. And then the other one to really watch out for is how the China reopening goes. As we've said so far, it's looking quite rosy in the sense that, data appears to be moving in the right direction. But will there be, further outbreaks of COVID that really do start to put into question whether the reopening can happen at the fast pace that it's happening?
So, what's the best advice for investors?
If you look at the experience of last year, it is always important to take note of how fast currencies have moved and how much they've taken back. For example, last November was quite a good, I think, wake-up call. Everyone was very, very bullish on the US dollar, but it turned very sharply the moment the Fed's rhetoric shifted, towards slowing down hikes. So do understand that there is volatility in this market, and they do move a lot within a short few months.